Is this the best thematic ETF on the ASX? Well, in this episode, we are about to find out. Welcome to ETF Explained, a series on the Get Started Investing podcast. In each episode, we explain one ETF to better understand it and to help you build the skills to analyze any ETF. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm good, Bryce. Very excited for this episode. Always excited, as you know. But in this episode of ETF Explained, we're going to be talking about an ETF that is close to my heart. It was my first ETF.
Wow.
You never forget your first.
No, never forget your first.
It is the Betashares Global Cybersecurity ETF. The ticker is HACK.
Thematic boy back in the day.
Yeah.
Wow.
It was, we weren't as familiar with index ETFs.
No.
I mean, that's been a real evolution for us over the journey here on Get Started Investing and Equity Mates. And a lot of the reasons I bought HACK back in it was like when it launched, 2017, 2018, still hold true today.
Yes.
So we're going to get into that, but the reason we chose HACK is because Hannah contacted us and left us a voice note.
Hey Bryce and Ren, love the deep dives you've been doing with ETF Explained. I'm keen to hear an episode on a cybersecurity ETF. My friend was telling me recently that CrowdStrike is up 62% since the massive hack this year, and it got me thinking about cybersecurity. So I was thinking of investing in an ETF. I found a Betashares cybersecurity ETF called HACK. Would love to hear an episode on it. Thanks.
Awesome. Great question. Thank you, Hannah. A reminder, if you would like to leave us a voice note, there will be a link in the show notes or in the comments below. Love hearing from you all. So that's what we're going to cover today, HACK. Yeah. We're going to look at why cybersecurity exposure and then go through all the key elements to understanding and analyzing an ETF, from unpacking the name, its purpose, the benchmark it follows, fees, performance, and more importantly, and most importantly, what we're actually investing in with its top holdings.
Now, we should say at the very start, we're doing this on HACK, the Betashares ETF. Global X have an equivalent, BUGG, B-U-G-G. So some of the conversation will be relevant to both, but we're just going to focus on one for this episode of ETF Explained. So let's start with the why. Why was I enticed by the cybersecurity thematic back in the day? Is it still interesting today? It starts with just the addressable market and then the growth of that market. So 30 billion connected devices today. That's more than 3 for every person alive.
Wow.
And that's just growing. Yeah,
that is incredible. Also, cybercrime is on the rise. We've seen reports that it is increasing by nearly 23% here in Australia during FY23. And if you just think about some of the major hacks we've had across some of the biggest institutions here in Australia over the last 12 months, it's been pretty scary.
Optus.
Medicare. Was it Medibank?
Medibank.
Yeah. Some of the large players.
Some of the big US government departments got hacked.
Yeah. McKinsey have come out and said that damage from cyber attacks will amount to about $10.5 trillion annually by 2025.
And that's up from $3 trillion in 2015.
Wow.
So just, the economic loss, the damage is growing quickly.
And spend in the space is just shy of $200 billion a year. McKinsey estimate that the global cybersecurity market will reach $1.5 to $2 trillion. So serious addressable market and industry size.
Yeah, so McKinsey think it will grow 10x. They didn't put a date on when they think it will reach 2 trillion. They just think that's how big it will get. So that's the thematic. That's why it's an exciting theme. An exciting theme doesn't make a great investment. We've learned that time and time again with thematic ETFs, medical marijuana, hydrogen, lithium. There is a long list of exciting themes that led to, what's the opposite of exciting?
Boring.
No, not
Dull.
boring. Poor performing ETFs.
Sure.
There was nothing dull about them. But let's unpack HACK and let's try and understand whether the ETF is as exciting as the theme.
Nice. So we always start with the name. There's a lot to learn from the name. Betashares Global Cybersecurity ETF. We know that Betashares is the product issuer. Now with this one, we're getting global cybersecurity. So we can take from this two things. A, you're getting global exposure.
Yep.
And B, you're getting access to a thematic here. cybersecurity, and obviously exchange traded fund.
Yeah. Now, when we see a thematic ETF, one thing that you really have to do is understand if the underlying holdings match the theme, because we've certainly seen some thematic ETFs where it does not. So we will do that as part of the next step of analyzing this ETF. As we always say, the best resource when analyzing an ETF is the issuer's website. They're legally obligated to disclose a heap of information on there. That's part of ETFs being a very transparent structure. So we can go on their website and discover a lot. So let's start with the purpose. On the Betashares website, the purpose is to track the performance of an index that provides exposure to the leading companies in the cybersecurity sector. The obvious question then, if it's tracking an index, what is that index? It's the NASDAQ Consumer Technology Association Cybersecurity Index.
Nice.
I think that doesn't really illustrate a lot. We're going to need to look at the top holdings.
We are, absolutely. So in terms of the nuts and bolts, the fees are 0.67%. Now, if you compare that to 0.04% that we saw with the ASX 200, it does look expensive, but whenever you're playing in the thematic or active space, generally you will see management fees in that 0.5, 0.6 range, just because there is really more that goes into managing and creating these ETFs.
I think they also have to pay the index providers more as well.
Yeah.
Yeah.
Now, performance.
Yeah.
How has this performed? So over the last 12 months, it's returned just shy of 31%. For the last 3 years, it's done 8.8% per year. For the last 5 years, it's done just shy of 18% per year. And since inception, when Ren bought it back in 2016, it's done 17.5% a year. Nice.
Yeah, it's been a good one.
Capital growth, does it pay dividends?
Oh, if it does, minuscule. Well, Bryce, the great thing is any of these questions get answered on the issuer's website. Over the past 12 months, its distribution yield was 0.6%. So you're not buying this for income.
No.
Yeah.
No. That's good capital growth then, 17.5% for the last 8 years.
Yeah.
Can't complain with that. So what has been driving that growth? And to find that out, Ren, we need to look at the top holdings.
So some names that may be familiar. Top 10 holdings in order: CrowdStrike, Cisco Systems, Palo Alto Networks, Broadcom, Infosys, Fortinet, Leidos Holdings, Cloudflare, Booz Allen Hamilton Holdings, and Gen Digital.
Yeah.
10 companies. How many of those names do you recognize?
About half.
Okay.
6 out of 10.
Yeah.
Top 6, to be honest.
You recognize Fortinet?
Yes.
Oh.
Yeah.
Full credit.
Yeah.
We've actually had an expert pitch Booz Allen Hamilton on the show before, Katrina Burns from Wilson Asset
shows
Management.
how much I listen.
She pitched it. They're a big contractor for the US government,
Okay.
implementing IT services. She thinks they're going to be a big AI winner.
Okay.
There's a shameless plug for our sister podcast, Equity Mates. But look, I think the thing is when you look at some of these big companies, across the board, they've performed really well. And that's why I like cybersecurity as a thematic more than some of these other thematics. It's because there's been a real rising tide lifting all boats phenomenon happening here. Obviously, there have been losers. It's not like 100% win rate, but just the growth in the industry has led to a general increase in spend across the industry, and there's been a lot of winners. And we can see that in some of the top holdings. Palo Alto Networks, since it listed in 2012, up 1,790%, or about 28% compound annual growth rate. CrowdStrike listed in 2019. It's up 437% since then, even with the sell-off around the not the hack, the outage. Yeah. That's a 40% compound annual growth rate. Broadcom listed in 2010. It's up more than 10,000% since then. That's a 39% compound annual growth rate. So you can just see that like the industry's done well and a lot of these companies have done well.
These big, and they're obviously the biggest players, so capturing a lot of this growth that's coming through.
Yeah. Now, past performance isn't an indicator of future performance. Who knows if this is a high watermark for the cybersecurity industry? That's the question you got to ask yourself. But yeah.
So one question I have to close out is around where it fits into a portfolio, and it's two questions. A, how do you think about this thematic in your portfolio? And B, you opened the show by saying, and we've spoken about it before, that thematics as bottom drawer investments are not the way to go, and some have been thematics that have turned out to be more like fads in a way. So how are you thinking about this thematic longer term, and why is it one that you're comfortable kind of having sit in there versus the lithiums and the like?
So I think about this as I've got put a portion of money into it, and I'm not like dollar cost averaging into it more or anything like that. It's just like I kind of treat it as an individual stock in a way, and it's just like rather than trying to pick an individual stock in the cybersecurity industry, I'm picking the industry to get bigger, but I'm checking on it as I would any individual stock, rather than some of these bottom drawer index ETFs. In terms of why I think this thematic is a little bit different to some of those other thematics you mentioned, it's just a lot more mature. Like hydrogen as a thematic was so nascent, like it was almost theoretical how early it was. And there's like a big development curve, a lot of investment, a lot that needs to happen before it gets to this stage. Whereas the cybersecurity industry is like a lot more mature. There's a lot more established companies. It's been around for decades. I think of those thematics differently. If you compare it to something like lithium, which is obviously more mature than hydrogen, but it's a lot more cyclical. It's a commodity. It's driven by those forces of supply and demand. It's a bit different here in this industry. The companies are more defensible. They've got more pricing power. And you think it's maybe a little bit more long-term in that sense. So for me, it's like finding thematic investing is riskier than index investing. They might both be ETFs, but they are not the same product. But for me, then, even if you drill down on thematic investing, not every theme is built the same.
Equal. Nice. Well, as we said at the top as well, if you're interested in the thematic, the numbers are there, the addressable market is there. There are more coming to the market. Global X, Bug, B-U-G-G is an alternative. And I'm sure there are plenty listed over in the US as well, if you wanted to have a look at those markets.
If I wanted to invest in this theme today, the first thing I'd be doing is putting Hack and Bug side by side and comparing the two of them. That might be a future episode for us. But Bug wasn't around when I first invested in this ETF.
Well, that brings us to the end. Thank you to Hannah for the question. Hope that it's helped get your head around Hack and the cybersecurity thematic. Just like Hannah, we love hearing from you. So if you want to leave a voice note, there'll be a link in the show notes or in the description. And equally, we love hearing reviews on our episodes. So if you could rate and review through your podcast app, or if you're watching on YouTube, leave a comment below. We love hearing what you think about episodes. All right, well, we will be leaving it there. Next week, we are talking about how it is not too late to maximize your superannuation in 2024. So stick around for that. We'll be back next week.